Welcome to this explainer. Today, we are analyzing a rare, incredibly compelling commercial real estate opportunity. It's basically sitting right at the intersection of sky-high demand and, frankly, severely restricted supply. So if you're looking for structural protection in your portfolio, you are going to want to pay close attention to the data we're about to unpack.
97.4%. That is the current average occupancy rate right now for student housing properties located less than 10 minutes from campus in our target market. Just let that number sink in for a second. A 97.4% occupancy rate means the market is essentially completely full. Demand is literally outstripping available beds.
Now, before we zoom in locally, we really need to frame this against the national backdrop. As you can see, U.S. student housing just continues to demonstrate incredible macroeconomic resilience, consistently drawing billions in annual investments. Even when there are broader economic shifts, this specific asset class provides really dependable returns. Why? Because education is a structural necessity. It's not just a luxury.
So, here is our roadmap for today. 1. The student housing boom. 2. Corvallis, a supply-constrained market. 3. Introducing the Fillmore Apartments. 4. Recent upgrades in interiors. And 5. Operational upside and investment.
All right, let's dive right into Section 1, the student housing boom.
Across the country, modern student housing fundamentals are just highly attractive right now. Robust enrollment paired with limited new supply makes this a total darling for institutional capital. It's basically a defensive play. Students always need a place to live, and universities simply aren't building enough beds to keep up with them.
Which brings us to Section 2, Corvallis, a supply-constrained market.
That national trend leads us perfectly into our specific local focus, Corvallis, Oregon. It's home to Oregon State University, the largest university in the state. And honestly, Corvallis is a fascinating market because you have this classic, intense supply and demand squeeze going on. On the demand side, Corvallis happens to be Oregon's most rent-burdened market. Renters need housing, badly. But on the supply side, the area has some pretty stringent anti-development policies. These policies have effectively throttled the kind of new construction competition you'd normally see in other major campus markets. So for an existing property owner, this local red tape is actually a massive competitive moat.
To put that into perspective, out of roughly 7,800 existing multifamily units in Corvallis, guess how many are currently under construction? 92. Literally just 92 units. The historical average is already incredibly low at around 67 units a year, meaning new supply is basically non-existent. When you have growing student enrollment and virtually zero new housing being built, existing assets become incredibly valuable.
And if you want to know just how desirable this location is, look at these numbers. We're talking a walk score of 85 and a perfect bike score of 100. For the modern, often car-free student renter, a perfect bike score is basically the holy grail. It means they can seamlessly get from their front door to the lecture hall or straight downtown without ever needing a vehicle.
Okay, Section 3, introducing the Fillmore Apartments.
So, the crucial point here is finding an asset perfectly positioned within this throttled, high-demand market. Meet the Fillmore Apartments. The exact address is 750 Northwest 21st Street. I want you to mentally highlight that. 750 Northwest 21st Street. It's just a really short walk to the Oregon State University campus and strategically located right near the downtown core and commercial areas. It is exactly where renters want to be.
Now, the layout here is exceptionally efficient, really maximizing rentable space. You've got 204 studios, and they're cleverly configured into 51 quads. And what makes this really special is that every single one of these studios has its own private entrance. Within each quad, the 4 studios share a communal kitchen, 1 full bathroom, and 1 half bathroom. Plus, every individual unit features its own closet and a vanity with a sink. It's just an incredibly smart, high-density layout.
Moving right along to Section 4, recent upgrades and interiors.
Let's look at how this builds into an even safer, more lucrative investment through recent capital deployments made by the current owners. If you're taking over a property, the last thing you want is a mounting of deferred maintenance, right? Well, the current ownership has already stepped up and heavily de-risked this asset by injecting over $1.5 million in capital expenditures. That is a ton of heavy lifting that the next buyer simply will not have to do.
You can actually see that capital deployment immediately. Outside, you've got fresh now leasing signage indicating highly active management. Inside, beautifully remodeled studio spaces boast updated flooring, clean lines, and those brand new private in-room vanities we talked about earlier. It presents incredibly well to prospective student renters.
And these upgrades carry right over into the shared spaces. In fact, nearly 50% of the units have already been fully remodeled. That includes updated kitchens with modern stainless steel appliances, as well as modernized clean shower enclosures. So half the work is already done, proving the concept and establishing a higher baseline for rents. But it still leaves enough runway for a new investor to come in, finish the job, and force further appreciation.
Finally, let's get into Section 5, operational upside and investment.
So, for any prospective buyer, the big question is always, where's the remaining meat on the bone? Well, the immediate operational upside here is huge. First off, a new RUBS, or Ratio Utility Billing System policy, was just implemented. That means the transition of utility costs back to the tenants is in its infancy, which is going to drive steady, continued revenue increases throughout 2026. On top of that, a new owner has the flexibility to push this property into a more unified student housing direction or even pivot to capture local workforce housing demand. Throw in 90 off-street parking spaces and on-site laundry, and you're looking at multiple robust revenue streams.
Now, you might be wondering, if this asset is so incredibly well-positioned in the supply-constrained market, why are they selling it? It's a fair question. The seller is simply repositioning their capital to fund a separate project out on the East Coast. It's just a timing situation for them, which creates a really prime, turnkey acquisition window for the next investor.
I want to wrap up this explainer with an exact quote from our source material. The Fillmore Apartments represent a rare opportunity to enter a nationally desired campus market that happens to be in Oregon's most rent-burdened market. With severe supply constraints, a 97.4% local occupancy rate, and $1.5 million already poured into renovations, you really have to ask yourself, in today's economic climate, can you afford to miss out on an asset with this much structural protection?